Well, new home sales rising 5.8% for the month of November, but we're looking ahead to October's S&P Case-Shiller Home Price Index. That comes out at 9 a.m. Tomorrow, we're going to get pending home sales. That hits the tape 10 a.m. I want to bring in DeBianchi Real Estate and former $1 million listing Miami star Sam DeBianchi. It's great to have you here, Sam, and good morning.
Good morning to you.
The Case-Shiller, I think, is going to be the really interesting one because that's prices. And that will show us what's happening in Tampa, what is happening in Miami. Where you are has still been one of the hottest markets. What are you forecasting? Is there any slowing down to the boom that we've seen in Miami?
So in South Florida, it really is truly booming. And going back to what you were initially saying about new home sales and how those prices, we did not predict that, but they went up. I predicted that, though, because one thing that I really will say that's the game changer in real estate are mortgage rates. And mortgage rates right now are circling around 6%. And because of that, I mean, we were seeing over 7% for a 30-year fixed as well. But you know, the higher these rates are, the more people want in a home. So they want the new home. They want the home with all the bells and whistles. They don't want the fixer-uppers, and they want to have everything built into that mortgage. So I definitely think that we're going to see that, especially coming into next year, where it's also predicted that rates will hit about 5.5% for a 30-year fix. So there is hope for buyers and mortgage rates.
And I just have a question, because there's a lot of people that make comparisons to what we saw in the late 70s and the early 80s, but the average home price back then was about $47,000. So the average home price today is about $400,000. As the interest rates are going up, whether, you know, long term they're going to go up much higher, what's going to happen when we're talking about interest rates being at, you know, 5, 6, 7, 8% on a home that's $400,000, $500,000?
So actually, it's predicted next year that the median price point will be $385,800 for an existing home, not a new home, but an existing home. And obviously, as rates go up, it's really putting a lot of people on the sidelines. But what I am seeing are that buyers are saying, you know what? There's not a lot of inventory out there. Rents are still very much sky high. So I'm going to go ahead and buy this house now, even if rates are circling around 6%. And then I'm going to wait for them to drop, because that is predicted to happen next year. And then they're going to go ahead and refi.
Yeah, they're going to refi. Yeah,
and that's the best bet.
That makes sense.
One thing that I definitely am noticing is that, you know, if you read all of these articles, it's about all of these people, especially millennials, that I own 20 homes, I own 50 homes, you know, and I think there's a lot of very over-leveraged people out there.
Sam,
and we're going to see that, especially in the first quarter.
Where are these millennials? We all want to know.
Listen, I used to own 10 homes. I used to own 10 homes, and I made a pretty profit. But do you know what it's like to be a landlord? It is not fun. Okay, I don't care what these articles say. It is not fun. And then you have your taxes being reassessed, and then those returns aren't too desirable anymore. Yeah. So it might make more sense to sell. And the great thing is you're still going to see price gains. I mean, obviously in years past, we were seeing in some cities, especially here in South Florida, 20%, 30% year-over-year price gains, and sometimes even monthly. It was insane. But you'll still make money as a seller. You'll still make anywhere from 5% to 10% year over year. So there's money to be made. Don't get greedy. But I do think that there are quite a few over-leveraged people, and we're going to see those properties hit the market. Is it going to be a crash? No. But at least we'll have that many more homes and opportunities for people to buy.
But then what about prices for 2023? I mean, because that's the one thing that we really haven't seen meaningfully fall. I mean, I think in some markets, Sam, I'll point to Phoenix, I'll point to Vegas. I can't help but think that you're going to see a 15 or 20%, just a correction. Not talking about a crash. This isn't 2008, but a correction on prices.
Sure, but again, sure. But as we've said, you've seen such huge price gains year over year over year. Even in some markets, if they're lowering by 20%, these sellers are still making money. So it's hard to tell, and as we know, it's supply and demand. Inventory is so tight, so there's still not a lot out there to really pull these prices down. There's not a lot of motivation, because if you bought, again, in the past few years, you locked in 3%, maybe even 2.75% for a 30-year fix. So you're not as motivated to sell right now unless you're getting a great deal buying, or unless you see another opportunity where you have to move or so on.
Right.
So I think it's a tricky market. I think that with rates coming down, that's going to be the game changer. And I think, like I said, rates have really transformed the buying landscape because now buyers don't want the fixer-upper. They don't want to come out of pocket. They're saying, well, if I'm going to have to pay 6%, then I want to have everything into that. And that's really the focus.
I agree. Sam, I got to tell you one thing. You and I agree on one thing. Being a landlord is not fun. Because I did that too.
No, it is not fun.
And I do not want to do that again.
And a property manager isn't cheap either.
No, they're not. 25%. Sam DeBianchi, it's great to see you. I know.
Thank you.
It's good to have you. One of my favorite topics, actually. You know, I might have a show about real estate. Just throw that out there. Wednesday nights. Okay.